Hello, I'm Kim Martin, Director of New Zealand Debt Management at the Treasury. On the 12th of September, the Treasury released the pre-election economic and fiscal update ahead of the New Zealand general election that is set for the 14th of October. Alongside this, we updated forecasts for the sovereign debt program. So I thought it was, again, a really good opportunity to provide you with an update. First, I'll look at the borrowing program and the fiscal outlook that it is based on. Then I'll look at the New Zealand Government securities portfolio in some more detail. We have made some changes to the borrowing program based on changes to the fiscal outlook. The borrowing program was increased by 9 billion New Zealand dollars relative to the budget update in May. And you can see this by looking at the green bars relative to the blue bars. It's also useful to see the program in historical context, as shown by the grey bars. Changes to the forecast borrowing program are also shown here, and you can see the current year's program, that's to June 2024, is set at 36 billion New Zealand dollars. That's $2 billion higher than was announced at the May budget. You can also see that New Zealand government bonds on issue are now forecast to reach just over 200 billion New Zealand dollars by June 2027. You can also see the forecast for short-term borrowings. They are unchanged relative to the budget forecasts. And within short-term borrowings, we include both T-bills and our ECP issuance. The revised borrowing program is based on revised fiscal forecasts. The government's operating balance, excluding gains and losses, shown here, is now forecast to return to surplus in the year ending June 2027. This is 1 year later than was indicated at the May budget. The delay to the surplus is driven by weaker tax revenues, both achieved and forecast, and a higher forecast expenditure track, including the increased financing costs due to higher forecast interest rates. Last month, the government announced an expenditure savings exercise to help minimise these impacts. These are included in the forecasts. Alongside operating expenditure, the government also updated its capital expenditure forecasts, and combined, these result in a residual cash position, as shown by the black line here. Based on these projections, net debt is forecast to peak at 22.8% of GDP in the year to June 2025, reading off the right-hand axis. This remains well below the government's fiscal strategy ceiling for net debt of 30% of GDP. Now I'll look at the portfolio in a bit more detail. So here we have the current portfolio of New Zealand government bonds. The bars to the left are nominal bonds and the bars to the right are inflation index bonds. The green bar is the sovereign green bond with the first issue that occurred in November last year. At the pre-election update, we announced our intention to syndicate 2 new nominal bond lines before the end of the fiscal year. So there's a May 2054 nominal bond line, which will form the new 30-year benchmark, and a May 2035 nominal bond line. The intention is to build the volume up in advance of that bond line then becoming the new 10-year benchmark bond. In the fiscal year to date, we have completed around 10 billion New Zealand dollars of the $36 billion program for this year. So that's almost 30% of the program. This is ahead of our required run rate, as shown here, even after accounting for the usual pause in tender issuance that occurs over the Christmas New Year period. This is partially due to the very successful tap syndication of the 2033 bond that we undertook in July. This raised 5 billion New Zealand dollars. The $5 billion of the 2033 bond line was the maximum target volume. It was priced at the tightest end of the price guidance. And you can see here resulted in a very diverse allocation, both by investor location, as shown on the left-hand pie chart, and by investor type, as shown in the right-hand pie chart. New Zealand government bonds continue to attract interest from a diverse range of global investors. The proportion of New Zealand government bonds held by investors outside of New Zealand has picked up above 60%, as you can see here. As at the end of August, the total dollar value of bonds held outside of New Zealand sits at 76 billion New Zealand dollars. Bond yields have increased materially over the recent months, alongside many of our global peers. New Zealand 10-year yields now offer around 5%, well above many similarly rated sovereign issuers. S&P and Fitch are also in recent weeks confirmed New Zealand's sovereign credit rating. And an update on our green bond program. So since the green bond framework was published in September last year, we have undertaken the $3 billion syndication in November of the 2034 nominal green bond line. Subsequently, we have issued into that bond via tender, and it's now approaching $4.5 billion on issue. We've also added to the eligible green bond expenditure pool. This is to include new expenditures from budget 2023 and the addition of another year in the eligible expenditure window. The total pool of eligible expenditure is now close to 9.3 billion New Zealand dollars, as you can see here. It remains our plan to issue our first allocation report by the end of this calendar year and to issue our first impact report by the end of next calendar year. Thank you, as always, very much for your interest in New Zealand and the New Zealand government securities market. If you have any further questions, please feel free to be in touch via the email shown here. Once again, thank you so much.